Based on previous halvings of Bitcoin, investors are, expecting and I guess hoping for some big gains in Bitcoin. Are they going to be rewarded?
Over time, for sure. What happens in the short term is always the hard part to predict. What's happened in the last couple of days here is that previously the miners received a reward that was twice the size that they received today. And this is part of a monetary policy that was set in motion all the way back in 2008 by the creators of Bitcoin. And it's the longest standing, unchanged monetary policy in the history of humankind. So what's interesting about it for the markets is that we've never actually seen anything, not gold, not, of course, fiat currencies, that have been able to not tinker with the monetary policy. And as we look into, pretty tumultuous markets ahead, we were talking about China on this show just a few moments ago, of course, the US as well, having something that's actually a depreciating, direction, anti-inflationary direction instead of inflationary is just key.
Is it also true, though, on the negative side of the ledger, Mike, that the halving of Bitcoin also essentially halves industry revenues? And for certain companies, therefore, it could actually be quite a negative event. It could maybe even force some closures or at the very least, consolidation in the sector. What do you think?
I mean, of course, that's possible. The mining companies that are running most of the mining today have been operating for quite some time. This is the fourth halving that we've seen. And understanding how to manage your treasury kind of through these things, I think, is getting better and better and more well understood. So look, for any mining company that hasn't been in preparation of a cut in revenue by half, look, they're going to get what they deserve. But on the second side of this, also, if you've looked at the fees collected on a per transaction basis in the last couple of days, they've literally never been higher. So now we see the opposite side of the spectrum, which is in addition to thinking about the decreased revenue as a result of the reward halving, we're also seeing like transaction fees have really spiked in the last couple of days. So there's a lot of interesting things that are going on within the ecosystem. As you look at broad global adoption over time, we're going to figure out how this all works. But so far, it looks, I think, very, very promising. I don't think we have any danger of miners going out of business in the near term.
Hey, Mike Martin here. This whole halving thing is part of the main or core attraction of any crypto. Basically, that is limited supply, right? Then you've got the ETFs and for BTC and likely Ethereum is going to go down the same road too. So that's the crypto equivalent of the Good Housekeeping seal of approval. I get all that. What we've been noticing recently as well that's been helping crypto, including BTC, is when geopolitics gets dicey, volatility spikes, etc., people get scared, money runs to gold, but they're also running into crypto. Is that trend likely to continue, do you think?
I think it's absolutely likely, especially because the ETFs are here. Bitcoin has been a new type of asset. We haven't seen it before. It's a bearer asset. It requires a level of security and regulation that we haven't had before. And with the introduction of the ETF, all of a sudden, institutional participants, even pension funds, can start to consider how they can touch this, and yet it kind of fits within their existing portfolio. So up until just the last few months, that simply hasn't been doable. All of them are rethinking how they're going to allocate their portfolio in the coming years. And a 1% to 3% allocation towards Bitcoin at this point, Fidelity is recommending it in some of their fund series for their investors. This trend is going to continue. As you mentioned, the fiat side, we have an inflationary world. The U.S. dollar doesn't have to be inflationary, but I don't think there's anyone that believes that the U.S. government is going to be able to bring inflation under control or at least stop spending. And by contrast, of course, you've got Bitcoin, which is now more scarce than gold. As people don't always realize that, there's 2% of all gold gets pulled out of the ground every year. And as the price of gold goes up, people mine it from more and more places, causing even more inflation in the gold sector. So Bitcoin is simply a better form of gold. As we get all the institutional access into this, we're going to start seeing more and more of a shift from that $15 trillion market of gold into Bitcoin.